Hey, Top Gun Options traders, welcome to Tuesday's Sitrep. I'm Matt Buckley, call sign Wiz, the primary model portfolio manager here at Top Gun Options. And interesting day in the market so far. We got absolutely shellacked with consumer confidence numbers. The previous was 65.4. Economists were forecasting 65.8. 60.6. Absolutely slammed with consumer confidence. Caveat that, or comma, colon, exclamation point, with the S&P Case-Shiller Home Index. Look at this. This is important because this is the first positive year-over-year gain since around fall of 2010, September of 2010. So, folks, let's put an asterisk next to 2010. What was going on in 2010 in the housing market? Well, Uncle Sammy was giving a lot of home buyers tax incentives and tax credits. So if you take away those kind of Uncle Sam months, there hasn't been a good year-on-year result for this Case-Shiller index since December of 2006. So that was actually good news. And the futures were kind of flat on that because, again, we're in crazy market. So good news in the market means that the Fed chief, who's scheduled to speak at Jackson Hole on Friday afternoon, might not be inclined to reduce interest rates. Well, you can't get any lower, but further monetary easing. All right. So the consumer confidence number coming in just getting shellacked is good news for Bizarro market because that means the Fed might be more inclined. Okay, so we're going to trade sideways for the rest of the week, and I just got done one of our primary live trade briefs where we put it on a weekly iron condor on the S&P 500 that's going to stay range bound. Why? We got preliminary GDP tomorrow, pending home sales, some crude oil inventories, the beige book, which I could probably tell you what it already says. Thursday, we have our typical weekly unemployment claims. Core CPI, personal spending. These will be interesting. Personal spending, want to take a look at that. And then Friday, Chicago PMI is usually a potential market mover. And then the Fed chairman, like we talked about, is speaking out in Jackson Hole, Wyoming, hosted by the Kansas City Fed. And we have some revised University of Michigan numbers coming out on Friday as well. So, folks, I really believe, and I just told this to our traders in our live trade brief, just got done doing some live trading for about 2 hours, that we are going to remain range bound going into the September jobs report. The August jobs report, which is in September. It's on September 7th. And then a week after that, September 12th and 13th, the Fed get together. Okay, so we breached 1400 to the downside last Friday, but guess what? It's been support. And I think we're going to trade sideways, this iron condor reflects that strategic mindset. So, what's going on with our friend volatility, the VIX? Well, volatility is starting to show a little bit of signs of life. Last week when we were in some of our sit reps, I said volatility was at 5-year lows, right? The VIX was at 5-year low, and here we are up almost over 20% on the VIX in a week. So seasonality comes into play a little bit. September, October, usually pretty volatile months. Traders are back from the Hamptons, and companies' rosy outlooks that they put out in January are starting to come into reality that they aren't so rosy. So the VIX starting to show signs of life from down last week in the upper 13s to 16 and a half. So the VIX starting to show signs of life, but in the grand scheme of things, folks, it's still barely got a heartbeat. We're still close to 5-year lows, and when the VIX is cheap, you buy it. When it's expensive, you sell it. So now, especially living down here in South Florida, 3 days ago wasn't the time to buy hurricane insurance. It was 4 months ago. Okay, so get some hurricane insurance now. And if you're trading with us at Top Gun Options here in our live trading or our trade alert services, you know exactly what you're doing and how you're hedged. So stop by topgunoptions.com/TA-LTB-services, and you can get on board for a trial of our skill-based trade alert and live trading services. Primary for folks who are relatively new to options, and then intermediate advanced for folks who know what they're doing, or you can trade both and get some great actionable trade ideas. And performance speaks for itself, folks. I like to say that numbers don't lie, but people's do. So I took over the model portfolio on March 1st of this year. So let's take a look at how we're doing. And we're only using about half of the $100,000 paper trading account capital. So based on using about $50,000, our model portfolio is up $62,000. That's nice. that puts a smile on my face, folks. It's 120-ish% return. It's a triple-digit return in just about 5 months. Okay, so stop by, get on board today, and that's today's market sit rep. We're going to be trading sideways the rest of the week, especially based on our bipolar reports today with good housing numbers and just absolutely horrible consumer sentiment numbers. And I think we're going to see some bipolarness through the rest of the week that's going to average out to keep us level, and we're going to see that in a nice SPX weekly trade we have on that can potentially earn over $2,000 for about 3.5 days quote of work. All right, so happy hunting. Make sure you hedge, and I'll be back with tomorrow's sit rep.